Hello traders, and welcome to this video analysis looking at the Japanese yen and the Swiss franc in today's markets. So traders, if you did watch the risk on risk off video, you understand the reason why the Japanese yen and the Swiss franc is a safe haven currency, because money floods into these two currencies when there's risk off sentiment, when stock markets are falling or commodity markets are falling, as a flight to safety. And then when the stock markets rally higher, the yen and the Swiss franc's safe haven appeal diminish, and the capital outflows means that the currencies weaken in the markets. And the reason mainly for this is because of, as I've touched on many occasions, negative interest rates mean that if you buy the yen against currencies like the dollar with a higher interest rate, remember you lose money overnight because of the negative difference in interest rates, and with low inflation in Japan and with low inflation in Switzerland, whilst you have negative interest rates, this means there's no expectations for interest rates going higher at any time soon. So again, investors are only buying these two currencies if other currencies are getting weaker. So say for an example, if the US Central Bank is cutting interest rates, which we've seen recently, which has been the cause for the yen to get stronger against the dollar. So unless other currencies are cutting interest rates or stock markets are falling, then we know the Japanese yen and the Swiss franc are never gaining strength because of strong fundamentals in their own domestic economies, because they have negative interest rates and low inflation, which means that if inflation is really low, the central banks have no reason to be raising interest rates. And while interest rates are low, it makes the currencies less attractive. So looking at the bigger picture, the dollar against the yen has been on a downtrend, but at the moment, as stock markets are pushing higher, as there's risk on sentiment at the moment because of the optimism around trade, Brexit, and further US-China trade talks, and the US Central Bank are forecast to cut interest rates, the ECB forecast to pump money into the European economy to try to boost growth, then this is weakening the demand for the yen. So at the moment, we're having a pullback, but we must remember there is still a downtrend in place, and we may just get a bounce off this trend line because the fundamental trend at the moment is against the dollar, against for the Japanese yen, because the Fed is expected to continue to ease monetary policy and cut rates further moving forward. So remember traders, if the Fed is cutting interest rates, that weakens the dollar's demand, weakens the dollar's appetite for investors in the market, because they receive less money overnight when they're buying the dollar. So if the Fed does cut interest rates this month as expected and signal more rate cuts are coming, then we can expect more weakness in the dollar as the difference in interest rates between the United States and Japan narrows. But at the moment, we're seeing a pullback in the markets because of course, positive sentiment in stocks, and it's exactly the same situation at the moment for the Swiss franc, having a pullback in price as stock markets push higher. But again, if the Fed is going to be cutting rates more aggressively moving forward, then we could see more downward selling for the US dollar against the Swiss franc. If the Fed doesn't cut rates, traders, then we probably would see the dollar rise further because the difference in interest rates is still more positive in the dollar's favor. But again, we know the Fed is cutting rates because of their response to a slowing global economy, and that's being driven by the US-China trade conflict. So if they can have a resolution towards trade, then we know the Fed is less likely to ease, and then we're likely to see, for example, a stronger dollar as a result. So let's see how that plays out at the moment, traders. But at the moment, it's looking like we're having pullbacks in price now because of the stronger sentiment in stocks globally at the moment. Then moving on to the yen against the euro, same situation. As I showed you, the European stock market's rising, the yen's getting weaker. So we're seeing a pullback in price at the moment. But if we're looking at the bigger trend, we can clearly see we've been on a downtrend because European growth across the economy has been weak. And that's been driven by the US-China trade conflict, which is actually hurting the European economy, because remember, Europe is an export-driven economy, and many of their major economies like Germany are struggling because exports are going lower globally because of the conflict that US and China are having, where they're putting taxes and tariff on each other's exports, and it's causing a lot of uncertainty. But at the moment, we're seeing a rise in the euro against the yen, But remember, we have the ECB's interest rate decision this week, so that's the key for the euro moving forward, and that will give this currency pair more of a directional positioning moving forward, based on what the ECB does and how much money it pumps into the system to try to boost growth and inflation across Europe. So traders, moving forward, if the ECB pumps money into the economy and helps the European economy recover, and if the US and China can reach some sort of trade deal, we could expect the euro to rise because the outlook for growth would improve. And of course, sentiment in stocks would get more bullish and the yen would be in lesser demand. So that could be a situation that could play out. Or the trade tensions could get worse and that will have a damaging impact on the euro also at the moment. So of course, there's a lot of fundamental factors driving the euro at the moment. But let's see what the ECB does later this week. And again, same situation for the Swiss franc against the euro, with lower growth in euro causing the euro to weaken. And of course, this US-China trade conflict having a big impact on European growth. And markets have now priced in these rate cut expectations that are going to play out this Thursday already in the market. But let's see how much money the European Central Bank is going to pump into the system. And then, of course, what happens with US-China trade talks will be very, very, very key for the euro moving forward. So again, let's see what the ECB does moving forward. Against the pound traders, we know it's all Brexit related, so we're still holding the buy position that we entered for the pound against the yen, which is in a profit at the moment, which is good. We should expect this to continue to climb. And the pound sentiment is going to get more bullish, I believe, which is why I bought the currency, because remember, the risk of an no-deal Brexit is really starting to subside now, traders, because Boris Johnson legally has to ask for an extension if he cannot reach an agreement with the EU. So that takes away the risk of a no-deal Brexit. And this should mean that all this previous selling should get repriced, and we could see the pound come up to this level over the next 4 to 5 weeks. So let's monitor the pound quite closely, because I really do believe we're going to get some strong turnarounds in the currency. And remember, the only reason the yen and the Swiss franc had been gaining momentum against the pound was because of the risks of a no-deal Brexit, and nothing to do with strong fundamentals in Japan or Switzerland. So moving on to the Aussie dollar, we are seeing a bounce higher in the Aussie, but remember, the Aussie has been getting weak in 2019 because of rate cut expectations actually being fulfilled by the Australian Central Bank. So is the Australian Central Bank going to continue to cut interest rates? That's the key question. If they do continue to cut rates, then we can expect to see the Australian dollar weaken further to the downside. If they don't cut rates, then we can expect to see the currency stabilize. But more importantly, the US-China trade conflict is the main reason why they've been cutting interest rates, because Australia is so dependent on China's economy for their own growth, because it's the biggest economy in that region of Asia. So that's a fundamental factor we have to wait and see. But at the moment, with stock markets rallying, risk on sentiment, a weaker demand for the Japanese yen, we are seeing the Aussie dollar pop higher in the markets against the Swiss franc and against the Japanese yen. But more importantly, traders, it's all to do with the forward guidance from the Australian Central Bank that will determine if the currency weakens further or not. And it's exactly the same situation for the New Zealand dollar. We know that the New Zealand Central Bank is forecast to continue to cut interest rates, but are they going to do that? Well, that's really going to depend on the US and China. So we have to watch out for these trade negotiations, see how they progress, and then we're going to have a more of a directional bias. But clearly, as stock markets are rising at the moment, we are getting a pullback. But we must remember in the back of our minds, against the New Zealand dollar and the Aussie dollar, the fundamental trend is still being very bearish against these two currencies that have clearly been on a very, very, very strong downtrend for quite a while. So we just have to keep that in the back of our minds at all times when trying to trade these two currencies. Moving on, traders, against the Canadian dollar. So again, we bought the Canadian dollar against the Japanese yen, which is in a profit, which is good. Now we know this is down to commodity prices going higher, so oil prices. And if this does continue, we could expect to see the yen push into a stronger profit. and that our Norwegian krona positions are also in a profit, which is great. And hopefully this can continue also in the market as oil prices continue to rise. So traders, hope that makes sense. So risk on sentiment in stocks, risk on sentiment in commodity markets, causing the yen and the Swiss franc to weaken. And remember, currencies like the euro, currencies like the Aussie and the New Zealand dollar also getting stronger, because as long as US and China trade talks can get more positive, that puts less pressure on the central banks to cut rates, and it gives the yen and the Swiss franc a lesser demand in the market. So I hope that makes sense, traders. That's my analysis on the Swiss franc and the Japanese yen. Thank you for watching.